This is our Forex blog for April 29th, 2013, and I'm going to turn on our demo trading, which allows me to scroll back one of the charts, and they're all scroll back in tandem. Alright, so when I scroll one of these back, they all go back with it. And for the last 4, or actually 6 to 7 years, we've focused on our currency meter, which shows you statistically how strong each currency is. Now we actually compare every currency, every other one, and create a synthetic chart with it, because it allows you to see things such as when the dollar makes a move down. This is all the dollar indexes. Shows you where the fib targets are for the dollar. Here at 8, notice how it found support and made a pullback. You can then wait for it to make a Fibonacci pullback to the 50 or 62% level, and then when it fails to get over those levels, look to short again. So you have this nice trend trade here after a counter trend pullback, and you have another one there as well. You can use trend lines to identify when to get in, or little rectangle patterns when it breaks out to get short. Notice a little pullback here, rectangle pattern, breakdown here, or a little bit after 1. These are some of the higher probability trades. You want to just simply use the currency indexes to find the strongest ones and buy those versus the weak. It's that simple. So let's scroll back and look at this earlier in the day. You can see the previous day's low in the dollar when it breaks down right here at 3. Very high probability trade. The euro is above its hourly moving average right here, so you could certainly look to buy the euro versus the dollar. The Swiss at that point isn't, plus the daily and weekly trend is down at that time. The Australian's trend is up, so you could certainly look to buy the Australian dollar. Same thing with the New Zealand, although it did have trouble at its previous day's high right here, but at 3, it's still above the hourly. This one's underneath the hourly, so you wouldn't buy that. You could buy the pound dollar at 3, and you'd want to avoid the yen, because the yen and the dollar are both weak. So avoid trading 2 weak ones versus each other. It's likely to be very choppy. So at 3 a.m. you got the euro dollar buy, you have the Australian dollar buy. This one's a little bit less good because it's just kind of going sideways with a slight down, but it is above its hourly, and the daily and weekly trend is up. And also the pound. So we're going to be buying the pound dollar, euro dollar, Australian, and New Zealand dollar at 3. And this is really how easy it is. There's the euro dollar. And notice at 3, you can use any time frame chart for this, but notice at 3 o'clock right here, it made a nice little move up. You have a nice little flag pattern. You draw your fibs off of this, and you got your fib targets up here. And usually our 2.0 white band, probably 75–80% of the time, contains price. So exit your trade up here, and also right here. Excellent high probability trades. Perfect oscillator also lets you see when markets are likely to reverse. Anytime they're at or above the 80 level, it tends to reverse. When you get an extreme right here, and it's also near the white 2.0 band, you might want to not only get out of your trade, but also look for a counter trend trade. You can, pick up 20, 25, 30 pips on the way down. So let's take a look at the pound dollar. 3 o'clock. Strong pound, or likely to be strong pound, weak dollar. This one's have been going up. It's in a nice rectangle pattern. 3 o'clock it breaks out, goes up 20 pips. If you drew your fibs off of here, more than likely the fib target would have given you an idea of where the profit is, and notice it went right to the fib target. It also hit our 1.5 bands. The perfect oscillator isn't at an extreme, but nonetheless fib targets are excellent for getting out of trades. Here's the Australian dollar. Remember, it's likely to go up, and the dollar is likely to go down. Here's 3 o'clock right here. It breaks out, and it doesn't really continue up that much more, but it does go up another 15 pips. And your risk is very, very tiny. So even on a trade that didn't really pan out much, this is your risk, and this is your potential profit target. Anytime your profit target's substantially bigger than your loss, if wrong, you got to take the trade. Sorry, I was recording, but or I thought I was recording as I was going over this. This is a New Zealand dollar. I was saying at 3 o'clock here, this one breaks out, kind of goes up a little bit. Even when your risk is this small, you can see even the ones that aren't the most or the least high probability was in New Zealand. it still made or had the potential of more pips than what your risk was. And I was saying, I didn't notice that I had the record button muted. When the perfect oscillator is showing an extreme here and here, you might want to get out of your trade. So if you had, bought this little pullback here, or when it broke out, this is what your risk is. When it goes up to the upper bands and you see an extreme, you might want to get out of the trade. And the Bollinger Bands on the perfect oscillator also are excellent to be using for that. So we're going to scroll forward in time and look for some other opportunities, and also showcase some other ways of using the indexes. Notice the Swiss. The daily trend shifted up, but the weekly trend is still down. It hit our upper band, and if you drew your trend line there and it breaks that trend line, it's not a bad place to look for a short at 8:30 because the longer term trend's down. At 8:30, this one, the Euro's kind of pulled back and is finding support. At 8:30, the New Zealand looks strong, as does the Australian. So let's take a look at 8:30 buying the Australian Swiss. The Swiss is likely to reverse at 8:30. You can see this one actually had a big sell-off. It's right at the lower band. The perfect oscillator shows an extreme. And you can see you got a very big bounce off of this, 25, 30 pips right off our lower band. And the perfect oscillator also happened to be at an extreme. Yeah, the perfect oscillator can hit an extreme when the price is at a band, or as you can see right here, it hit an extreme when the bands were way farther up. This uses different time frames. The normal containment bands are using hourly data, and I have this set for 5-minute data, so you see a lot more extremes with this. And notice earlier today, if all you do is get out of trend trades or even consider doing counter trend scalps, when these extremes get hit, you had a short here and made money, you had a buy here and made money, you had a short here that made money, and those are the only times it hit all day. And that's why I call it the perfect oscillator. It's not always 100%, but it is very accurate. Let's take a look at another trade in the Swiss. Notice it came back up to the previous high, failed, and it broke this trend line, or you could just say, this little wedge pattern right here, 12 o'clock. What's likely to be going up at 12 o'clock? Well, this one's just kind of drifting up. This one's just broke above the previous day's most actively traded price. The CAD's looking pretty strong, but this one's likely to go down. So it just traded against any of them that are likely to continue going sideways or have a good chance of going up. The Australian and New Zealand were both strong today. So we'll look at 12 o'clock, an Australian, Swiss buy, and a New Zealand Swiss buy. Here's 12 o'clock. You can see this is kind of a dead time of the day. This one unfortunately only went up 5 pips. It's just kind of chopping around. Anytime you get into trades like that, you have every opportunity to get out near break even or a few pips. Let's see if the New Zealand Swiss get any better. Here's 12 o'clock on this one. And unfortunately, this one had already started to go up at that time. You can see at that time, it was very close to an extreme. You kind of want to avoid buying near the 80 level because you can see how accurate it is at pretty much causing some kind of a pullback each time that happens. Notice that was the high of that move, the low, big move up, the high, big move down, and earlier last night, somewhere in this area, end of the up move and down. You can see just a little bit ago, and this is very much statistically tied to the time of day. What is a big move for this time of the day? This tool knows it, and it shows you right there. And typically, at 80 levels up and down, markets reverse. You can see, it bounces from there. And for scalpers, this is an excellent tool for helping you get into trades at almost the ideal times. And it's also what I consider to be a predictive tool, because these extremes happen and then afterwards price reverses. So It's one of the few leading indicators, along with, I would say, Fibonacci profit targets. Using trend lines on our currency indexes also is a very good way to predict future price moves. You can see, especially when you trade in the direction of the trend. If you have a trend line, going down on a currency, and it finally, or at some point, breaks that trend line, usually you're going to get a little bit of a bounce. So when not, you're going to have a small loss. And when you do get a trend line that gets broken, you tend to have very big moves. And you can also look for multiple hour, low volatility, choppy. The more times it tests two levels, like this, when it finally does break down at 10, that's a great one to be selling versus one that's strong. So at 10 o'clock, the Australian and the New Zealand were strong. So we'll take a look at, for the last trade of the day, the Australian yen buy at 10 o'clock. Strong Australian, weak yen, 10 o'clock is very likely to go up. And you can see that went up 40 pips in an hour and a half. It's just a wonderful way of trading when one currency is making all-time, or I should say, lowest lows of the whole day. And to end today's class, again, Perfect Oscillator, excellent at predicting reversals. Very close to the low here. You can see it pretty much stopped going down, kind of drifted slowly up, kind of a dead time of the day.